Greetings, everybody. It's Jeff Scott. It is almost midnight on Saturday night, going into Sunday, April 1st, and this is my top-down review. We'll get this started up here. Great day here in the Scott House, as I am a proud graduate of the University of Michigan. And who would have thought that Michigan is no longer a football school, but apparently has turned into a basketball school. But looking forward to Monday night, although Michigan, well, it'll be an interesting game. They've already outperformed in my book. Speaking of outperforming, how about the market? I titled today, Can Strong Seasonality Quite Volatility? And I'll talk more about it, but April 1st begins April, obviously, and it's no fool that April is a very strong month in the market, typically, and I'll show you some data if I remember. Disclaimer, this is for education purposes only. Anything I recommend is in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent. I paid for all the software I use. No one pays me what to say anything. And trading involves risk. You alone are solely responsible for any decisions you make. I have a lot of influences. What I've done is I've learned from a lot of smart people. Many of them are here. And then I was fortunately able to do simple things like create my own style trading, and I call that the Be Your Own Guru. Learn from smart people, put it together, and develop your own style. I started with Can Slim, improved by Morales and Catcher, Woodward and Brown. My buddy George Lee, who I'll be speaking with next weekend in Orange County, Van Tharp, Position Size and Money Management. And then my buddy John Person, whose biggest influence on me now is he taught me how to play golf. But short of that, before that, he recently became a friend, but I bought his software a decade ago before I even met him, read his books. Got some great indicators, and it's really helped me go from finding great stocks to actually knowing how to make money trading them. I have a lot of different programs. In fact, I bought Genesis originally when I bought his software. Genesis is great, but I don't think it's a growth software since you can do so well with TradeStation or Thinkorswim basically for free. I use HGSI for most of my analytics. As EdgeRater supports it. I do seasonality and have a number of websites I like. Here's the website for highgrowthstock.com. As I've said, I am not affiliated, but it has a free 30-day trial without a credit card. And if you go to investing strategies, you can see a number of videos by myself, Ron Brown, and others. Stock patterns are cyclical. Bottoms are an event. Tops are a process. And if you listen too long to the news media, we clearly are falling down and it's entering a bear market and everything is horrible. But I still think we're in the topping process, and that process can go on for a while. Some of my longer-term indicators, like I addressed some last week, have not rolled over yet. So to me, we're still in this uncertainty, and we were actually up this week despite two very tough days, Tuesday and Wednesday, certainly for me. I ended up the quarter up about 30%. So I'm pretty happy with that, but truth be told, I lost quite a bit of my gains that I had beyond 30% over the last couple of weeks. I've got some big positions in some of the FANG stocks that got murdered, and although I'd written calls against them, they didn't fully protect me. And I also had a big boost because I sold a bunch of things before the market rolled over in late January to pay for the boat. That said, I'm not going to complain about a 30% return when the market was at best flat to down a bit. But we are still in this uncertainty. It feels like we're rolling over, but it ain't over till it's over. And as I said, processes take some time. So that means I'm not all in. I've raised cash, taken smaller positions, and I'm selling premium to buffer some of the positions I have. April, as I said, is a strong month, so maybe we get another leg up, but I think caution is still a smart thing to do. Friday's sector review, just suffice it to say, as you all know, it was a very strong day. and you could see there's green everywhere. Utilities probably were one of the stronger this week with the increased volatility. You'll notice up here the futures are red. And what's important to note there is they all sold off between 4 and 4:15, 4 and 4:30. Not sure if that means anything, but I was watching the market, and the market itself peaked and then sold off in the last hour. So whether that was a short covering rally and then folks wanted to square their positions before the holiday weekend, or whether there's more to it, we'll find out sometime late tomorrow when the futures open. If you look at major markets, and I'm a moving average guy, and let's get out of this and go actually look at the charts. I think it'll look better. And maximize this. This to me, it's really trying to hold here. You touched here and here, had a rally that failed, shooting star here, market rolled over, and 1, 2, 3, 4, 5 days all in the vicinity of that 200-day moving average. Two things come to mind. One, that's pretty good support, and is it going to launch us higher this week? And number two, if we break down below this may turn out to be pretty tough resistance because it's been intact for quite some time. That's on the E-minis. The NASDAQ, has not gotten down to the 200, nor has it gotten down to the February lows. I bought my boat on January 25th. So I took my money out somewhere in this range here, which is just luck. Just luck. But again, NASDAQ, positive day, hasn't come down to touch the 200. The YM, a lot like the S&P, has not reached the 200. But, you start looking at where these bars closed at, it's kind of come down to where the closing were on the pullback in February. So it too, like the S&P, may be getting close to a short-term bottom. If I look at the Russell, and this is a strong time of year for the Russell, it too looks like it's reversing here. So it wouldn't shock me to see a couple more days run, and then you kind of wonder, do you run up into that 50-day moving average and fail and get a better place to short? The VIX came down on Friday nicely, but it's still up close to 20. And the dollar broke above the 50. Now, it's had a hard time staying up here over the last couple of months, and the weak dollar is probably good for stocks at the end of the day. So, one thing I wanted to check here. The yellow is the 50, the green is the 17, and on both the E-minis and the Dow futures, you've had a cross below, the 17's cross below the 50. The NASDAQ and the Russell have not had that cross. And again, I think that 50-day moving average, which is 60 points higher on the S&P, quite a bit higher on the NASDAQ. I think that to me is an area that I'm going to worry about being resistance. If we quickly look at weeklies, notice how it's running up the 50 weekly. Let's take a quick look at these. I spend a lot of time on the markets because, frankly, that's what matters. 50 weekly, riding up, still intact on the E-minis. The NQs, the doji here. It would be nice to have it open up and set up a high close doji this week. That would be awesome if you're bullish. The Dow, up move on Friday this week, but really less impressive than the NASDAQ. And then IWM also a doji this week. Here's the weekly VIX, and you can see it's not as high as it was, but it's also much higher than it was settling out back here. And then the dollar on the weekly is still pretty weak. So that's kind of my impression of the markets using Thinkorswim. Go back into here. And then Genesis isn't up and running on this machine, but it gives me the chance to remind me that from a monthly, we're still very bullish. Although we have had 2 months in a row to the downside, but we have been in a big, big run. Rates came down this week. This is the 10-year and the 30-year. This is the markets. And then down here in white, this is the S&P. So you can see it bounced a little bit this week, while rates actually came down on both the 10-year and the 30. AD lines, you can't see them well here. You can see them better here. The AD line turned up this week, as did the major ETFs, and so did the bonds, interestingly. Breadth, stocks above the 200-day moving average, stocks above the 40-day moving average, both moved up. And more importantly, last week I said we were at a reversal point on the 3-week new high, new low, and it reversed on Monday, but it's still in the lower part of the range, so certainly not overbought by any means. The daily McClellan, no big divergences here. Not at an extreme, neither is the weekly. Current buckets, this is bearish with 69% of the stocks in the S&P 1500 trading below the midline in the S&P, but very few at the bottom of their Bollinger Bands, midline of their Bollinger Bands. Trading the 69% trading below the midline of their Bollinger Bands in the S&P 1500, very few near the bottom. Note, I update all my edge rater lists every quarter, so there's a new list for 4-1, just to make sure I'm not looking at, missing some stocks or looking at stocks that no longer trade. Hindenburgs, we've talked about these many times. Hindenburgs usually occur before a major sell-off. There has not been a great sell-off without a series of Hindenburgs. Problem with Hindis, 1 out of every 4 periods when you get a Hindenburg is actually real. The others could be flat or just a small pullback. If you want to be bullish in this market, we do not have any recent Hindis on either the NASDAQ or the more traditional NYSE. Market tone, we actually flipped to neutral on Friday. Monday we went yellow, then back to red and back to neutral. It is neutral to bearish. I would call this in here with the green more bullish, or neutral to bullish when there was yellow. So the market's flip-flopping, and even the sectors on Friday improved with the super strength being in the XLU for utilities. 3 different indexes that I like to look at. I have to change the price line here to bookings, but it's already changed in the index. And you'll see the same story. These are the canaries, some of the big leaders, big run-up, broke down below the 50, reversed on Friday. Is this the end of this? It remains to be seen. Or are we going to retest or fall and test the 200? This is about how close to the 200 we got in the pullback in February. We'll see what it does on Monday. My Scott index, this was over a year, or almost a year ago, of leaders, and it took until the last couple of weeks to break down. It too had a big day on Friday. We'll have to see if it's ready to bounce. And then the melt-up leaders, which I looked at right before the market rolled over, and some of these are still attractive to me, it also broke down. And can it get back above the 50 quickly, or is this market done? So I use these as well as the indexes to give me a sense of where this market is going, and I'm hoping to see a bounce this week. Know your news and earnings. As I look through this, a couple of things stood out to me. We've got the monthly unemployment coming on Friday, April 6th. That's a big deal. We've got bond auctions on Thursday. We'll see what that does to rates. And you've got some Fed heads speaking. Raphael Bostic on Thursday, Charles Evans on Friday, Loretta Mester and James Bullard on Wednesday. And, and then Neil Kashkin on Monday. When Powell, the Fed head, speaks, the market falls. We'll see if these folks can stabilize the market. And then earnings, we're starting to get into earnings season, and some of the first ones to come through, Monsanto, Conn's, Acuity Brands, CarMax, Lennar, Greenbrier. So as I put down here, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earning date is scheduled. Market thoughts. Holiday week started, ended strong, but was weak in the middle. Surprising to see a market actually finished up on the week. FANG stocks, which have been pulling this market ahead, finally broke down on news, Facebook, data security, and Trump seems to have a personal campaign against Amazon, tweeting again over the weekend. Frankly, he looks like he's pissed because of something in the Washington Post, which Jeff Bezos owns, so he takes it out on Amazon. My long-term indicators still say the bull's intact. But, reality is how long before the sell in May mentality starts to impact. Still expect news to drive, whether it's more Trump tweets, North Korea talks, or White House legal follies and rotating doors. While hopefully some positive tax break enhanced earnings reports lift the market as we enter one of the strongest bullish months of the year. And I'll tell you, something on Friday happened that no one knows if it'll ever come to fruition. But Walmart potentially buying Humana. That should be interesting for retail and for healthcare this week. Typical top-down agenda, onto the chart. So before I even do anything with the charts, let me go and play the seasonality card and show you what I see. Not lots. There's 3 major seasonality programs: Magenta Trader, Best Choice Software, and Seasonality Trader. This is I like them all, to be honest, but this one I think has the best graphics. So let's look at the spiders. The spiders have been very volatile, and frankly, they've been coming down. It's not a very attractive picture here because they are coming down. But notice where we are sitting right here. We're at the bottom of the channel and in a very seasonally strong. In fact, don't do this to me. Let's see, data. Well, it's not showing you, so let me just get to the punchline. Let's see if I can bring it back here. When I looked at it before, it was, I think, up 9 out of 10 years, average 3 or 4%. When I looked at the Qs, this is all because I changed my resolution. The Qs are up 7 out of 10 years, average of 5.8% up, the down year down 0.5%. So the Qs, the spiders, the diamonds, 8 out of 10, average 4.2%. What about the Russell? Seven out of 3, 6%. Try spiders one more time. There it is, 9 out of 10, 4.5%. So it's a seasonally strong month, as I said before. Now, going into that, let's take a quick look at some of my favorite indicators. Let's go into the futures. Let's take a look at, start with the E-minis. All right, hold on a second. I got to put one in here. Let me add. All right, so we're going to start with the E-minis. So remember, I look at 5 or 6 different things. Number 1, am I going to sell or a buy on daily, weekly, or monthly? Long-term buy, daily and weekly sells. What color is the paint bar? Green, I can go long or hold. Red, I should go short or hold. Blue, I can do whatever I want, so it's blue. Third thing, where am I within the envelope? And you can see we moved back in within the envelope, but we're on the lower part. Okay, fourth thing, are there any red dots above, which is bearish, or green dots below, which demonstrate divergence or suggest divergence? There are none active right now. Then I look at where am I on my high jump, we're low, and then I look at the weekly bongos red. So I see a weak market, nothing to really love here on the E-mini. Up, down, up days. It's at the lower part of the channel, which might be a positive, but looks weak, and that must be where the after hours on Friday brought us back in some. All right, so that's the E-minis. The NASDAQ futures, also in a sell signal in blue, daily and weekly. Bongo weekly low here. Russell futures, sell signal, and Dow futures. So everything is in a sell signal, at least on the daily. Weeklies look a little bit better on several of them. So there's nothing here that tells me the market's strong, despite the fact it was up a bit on Friday. The dollar is in a buy signal of interest as well. So hard to get excited to the long frame on the markets thus far. I did mention they were up last week, which is still to me bizarre considering how it felt. So let's go down to Woodward and Brown user groups. Let's go to Major Markets Plus. Let's put the T value on, and let's see what's working. So the first thing is, it's never good for your portfolio if you're long equities for utilities to be number one. And volatility actually on the bottom, big stocks, NASDAQ 100, S&P 500, S&P 100. Then you get the Russell, the 600, the NASDAQ composite mid caps. So small mid caps outperforming big caps. Gold actually up here, and volatility dropped. If I look at a 5-day performance, you could see volatility in semis and the NASDAQ 100 and NASDAQ composite and biotech, and the Russell were the worst over the 5 days, and the strongest over the 5 days was gold, utilities, and bonds. Again, not a great thing for your equity holdings. Let's take a look here. So, as we know, it's bouncing on the 200. This is the S&P 500. Look at the Dow. Right above the 200. Look at the NASDAQ. A little bit better, but kind of getting at, close to the closing days where it fell back in February, and then the Russell 2000. So this is not a bullish feeling review, but all it's going to take is to get back above the 50s to change my tune and other tunes. So, and the Russell, again, well above the 200. So are we done going down, or are we going to come back and retest early in the week? Time will tell. Whatever it is, when all your indexes are below the 50-day moving average, it's hard to be super bullish. The dollar spurted a little bit above the 50. It had some kahunas this week, coming out of mobile breakout from a squeeze. Weekly bongo has gone green. We'll see what this thing does. These are the Hindenburgs. They're negative. We'll see if it moves up from here. I have my doubts. Volatility, although Larry Kudlow in the White House, he's kind of a strong dollar guy. VIX coming down, but still above the 50. again, compared to where we were for the last half of 17, this is a dramatic difference. And I think up on concerns of with the market rolling over, you saw gold pop earlier in the week. It finished down on the week, but with a positive day on Friday. And silver didn't even break above the 200, clearly weaker than gold. So just for grins, I'm going to go to the S&P 1500 because that's a good view of the market. And I'm going to go into this chart here and demonstrate why I'm still okay with the market. Let me give us a lot more data. That's a lot more data. To me, what I want to avoid is a bear market. And what happens when the market rolls over? You start to have the moving averages cross over. This is a guppy moving average chart. You have the price break first into the moving averages and below. And you have the MACD crossing below the zero line. Up here, we cross above the moving averages and the market has a nice run. Up here, you cross above the moving averages, you chop around, and then you take off here when we break above the MACD. Chop in 2015, the MACD broke down. So here we are in the S&P 1500. MACD is still positive. That doesn't look horrible to me. It doesn't look like the bull market is over. I throw the S&P 500 on, similar pattern, and I put some annotations there for one of my live education. The MACD is pretty high up. We're not even close to the moving averages. This is why I think the market's still intact, but it's something I watch on a daily basis. All right, so I'm sort of, at best, mixed, probably leaning towards the bearish on the charts, and then I'm neutralized by strong seasonality. In fact, let me show you something else that talks about the seasonality. This is a workbook that I create in about 3 steps out of Excel and using EdgeRater to feed it. And what I do is I look at a large universe of stocks, and what I'm basically looking for is I start with this view here where I get 2 week, 1 month, 2 month, 3 month, 4 month, 5 month, 6 months performance. I'm running this on 20 years of data, so up and down should equal 20 if a stock's been around a lot. So this tells me how many years it's up and then the average. So then I play with it and I look at what percent are winners, and then on the ones that were, what was the return here. So having something that wins 100%, like bonds, short maturity ETFs, were up 8 out of 8 years, but they weren't up a whole lot. So there are a lot of bond funds here that are up at this time of year, which I have no explanation for. But what I'm interested in are stocks that have a decent return and a high rate of being up. Legacy reserves, an energy stock, which we'll talk about energy being strong, up 32% average, 9 out of 11 years. So 82% of the time it's up. The average is 32%, and I then calculate a score of 26. It had the highest score. I look down here at Con, out of interest. It's up 11 out of 14 years, an average of 18%. And this is one that has earnings this week. Tech Resources, up 8 out of 11 years, average 13%. So I look through this to figure out where the movement is, and I like to combine not just the winning percentage, but how much it moves. Now here's the downside stocks. These are all the ones that had more down years, more than 8 down years, and less than 3 up years in the last 20. And notice all the things that go down this month. Bear emerging markets, the VIX, short the S&P, short the Russell, short the Qs. All the shorts and ultra shorts, if they're going down, that means the market's going up. So there's a lot of positive seasonality this month that hopefully will, for the bulls, will lift the market up a bit. So next thing I'd like to look at is the industry groups. I've got 173. And short-term momentum. We had a big day on Friday, so no surprise. We have a lot of groups came to the top, while short-term momentum to the downside was only one group, which was electric power equipment. So now if we go back, if we look at 5-day up, we had 3 big down days. We still had 47 up, and 5-day down, 48 up. So over a longer period of time, I'd say the market's pretty neutral, but certainly had a very strong day on Friday. So let's just take a look at some of the groups that are up. Exploration, semis, application software, oil, gas services, internet communications, specialty pharma, steel, more steel, some banks. So it should be, these are kind of stocks that I own, some growth stocks. Let's take a look. Right click. Now, several of these energy stocks made my buy list. And we want to get into a chart that we can actually use. RSP Permian, I passed on this one because it's already had a big move. Great earnings per share growth compared to PE. Lots of demand. Still may be good. A lot of volume came into the stock at the end of the week. You could see 13 million on Friday, 34 million on Thursday, and if I go back here, 2,600,000, 2 million. So something's going on with RSP Permian. Is it being bought? That's what it looks like. So I'm going to go into, right click, more info from the web, go down to FinViz. Yep. So it's being bought out. Good reason not to be chasing it. Parsley Energy. Here's a stock that been in uptrend, pullback. This is the 50 weekly. And so it's coming back up. Okay, come on. And as you can see here, pocket pivots, Kahuna, mobile breakout. You know what? I was demoing something. Let's go back over here. Mobile breakout from a squeeze. So this has the things that I like to see. Parsley Energy made my list. Good earnings per share growth. Here's the PE. In 2 years, it's gone from 62 million to 300 million quarterly. So this is a nice looking story. This is a big one, Pioneer Natural Resources. Again, great earnings per share growth. A big company with $1 billion of revenue on a quarterly basis. Again, a pocket pivot and a Kahuna. I passed on this one because it wasn't above the 50. Energen, this one's breaking out. Multiple pocket pivots, Kahuna's out of a squeeze. Great earnings per share growth. Apache, a big name. Down low right corner, I skipped this one. It's got a big multiple, but this has been a good oil company long term. Marathon. So you have a lot of possibilities here. Now sometimes on oil companies specifically, I'll go to my scaled. And the reason why I do that is I want to look at stocks who have big volume compared to their typical volume, not stocks that always have big volume. And I want to point out one that came to the top that was one of my favorite picks, which was Viper Energy. You got to love it. VNOM, Venom, is its uptrend. It's a tipper. Uptrend, pull back to the 50. You had a pocket pivot, mobile breakout from a squeeze, a Kahuna. your bongo turned green, your earnings growth is much more than your multiple, and your revenue is growing as well. And Viper looked good to me. So let's go back up here. So I think there's a couple of energy stocks that look interesting. Semiconductor devices. Who would have thought after last week? It's because I all had Fridays. Let's see if there's anything here that looks interesting. NVIDIA, I still think this is a good story, but the bongos have turned red. It's topped for now. I wouldn't touch it until it moved back up above the 50, but I'd still be interested if it does. It's got good earnings per share growth. Intel, don't like the earnings. Don't like that. Qualcomm. So why did this group make it? It made it because it's got big volume, and it had a positive day. Most of these stocks. Just see if we flip anything by going to the scaled. Here's one that I used to own. One that I liked, so I'm going to go down. Actually, I'm glad I don't own this now. It came down quite a bit. So semiconductors don't look that interesting to me. And again, they were up now because of their up day and big volume. But if I neutralize the impact of volume, they're down to group 55. That's interesting. Application software. After the market's been choppy, I didn't expect to find a lot of great charts, but I did. Salesforce, great earnings per share growth, but a big PE. Pull back to the 50. I suspect if the market is strong, this will be a good place to be buying it, but you need some market behind it. Activision Blizzard, pull back to the 200, not interested. Verint had a big gap up. I'd want to know why, so I'd do quick add. More info from the web, go down to FinViz and see if these guys were bought out too. Ooh, on earnings. Okay, well that's interesting. Don't know what they do. Interesting pattern. Mobo, I know this one well. Had a nice run up here from 24 to 40. It's pulled back some. I might be interested in this if it gets some momentum. Adobe, this has been a leader. It's kind of like Salesforce. If the market goes up from here as a stock with good earnings per share growth, you can buy off the 50. All right. Oil gas services. So this is the big boy. Halliburton and Schlumberger have sort of been languishing of late. As you can see, they've been very flat for the last month and a half. With oil prices up and oil stocks strong, are these going to follow? You had a mobile breakout from a squeeze, a pocket pivot in Kahuna. I just wish it was above the 50. Great earnings per share growth. And Schlumberger looks a little bit worse as it's even further below the moving averages. Internet media. That's interesting. Remember, this is a 2 momentum, so it's taking into account price change for 2 days and volume. And, this is a stock that has massive volume. So is it reversing here? I sold some of mine to raise cash. I kept some, and I sold calls against it to buffer some of the drop down. My guess is it's done going down for now. It's not as if people got credit cards for them. They got who your likes are and dislikes are and who your network of people are. So that stuff you don't necessarily want to share. But let's see. In a second, I'll show you what I want to show you on that. So just put a place mark. Google. Is this a time to buy Google? Sitting on the 200. I'd like to see some momentum first. That's Google L. Here's Goog. Weibo is one that I'm still in. Maybe I'm a sucker for the earnings per share growth, but I've been in this stock since it was 30, or I should say in and out. This is Weibo. all these have to hit, there's some healing and momentum needs to come in from my perspective. Now what I was going to say is, I don't know what Xerox is. Here it is. Remember Xerox? Not Xerox. Dumb. Equifax. All right, what is Equifax? Not that. Hold on a second. All right, let's try EFX. So these guys give away your credit card information, and they dropped, no, that's not what I want, EFX. There you go. So they dropped from 140 down to 90 by giving out your credit card information to the dark web. They're not back to where they were, but they've made up a huge percentage of their drop. Do you not think that Facebook, which gave out who your friends are, is likely to make a comeback too? I do, and I probably will kick myself someday for paying capital gains, but I needed to raise some cash because I wanted to be ready for when the market drops. Communication equipment, Cisco. And, nice move up, dropped below the 50, had a pocket pivot, kahuna. That might be one to watch. Apple really can't get out of its own way. It's sort of chopping around here, although earnings per share certainly are picking up. Arista Networks, a big leader that's pulled back. I'd rather see some momentum and get above the 50, but that's me. Plantronics, here's a nice move. Breakout, Bible gap up, bubble breakout from a squeeze, pocket pivot, kahuna. Not much in the way of earnings per share growth, but that was a nice move up there. So I typically go through the top 10 groups, and I'll do them both this way as well as my scaled way. And again, the scaled way, what it's doing is it's taking out the impact of absolute volume and looking at a force index that instead of being calculated times volume, it's calculated times today's volume over the average volume. So stocks that have a big volume today will have a much higher force. So for example, household products, Spectrum Brands, they didn't even make the top 10 before, and I can tell you there's a number of good stocks in here. So Spectrum Brands is, this has been in a downtrend for quite some time. Big kahuna, one to watch. I'm not ready to jump into that. Energizer Holdings, this was interesting here, and then it had a Bible gap up. Clorox, I'm not buying Clorox, but it had a big move on Friday. And then the one that, and here's HRG, which got back up to the 200. So this was a group that had a lot of move, but they started off kind of low, and they're not the kind of stocks that I like to buy. So you notice some other stock groups made it up in here. We can look at steel and raw materials. Everything's beneath the index, so I usually pass. All right, so I looked at force up. We looked at force down. There really wasn't anything there. What I do is a number of scans, and you could see here some of my favorite smart groups, and these smart groups are done for you automatically every day. Somebody asked me, what about the group inclusion report? Well, that's done for you every day as well. It's called the top 50, and this would be the stocks that were in the top 50. I take all of those and a number of other scans that I like, including the Chris Tuck filter scan, which I showed you guys not too long ago. And then I also complement those scans with a number of other scans that I get out of IBD, MarketSmith, and a few other places. And you can see some of the scans are here. And I combine those scans into what I call the consolidated buys. We're 1,149 stocks, and then I look at those that are not ETFs that have more than 500 shares and $5, and that's the ones I spend my weekend scanning. And today that was 642. I came up with some stocks that I liked for various reasons. This is the list, so let me take a couple of minutes and review some of my thoughts. This is my personal thoughts of what I may be doing on Monday, but all that matters to me is the market, and if the market is not supportive, then I'm not doing anything that I'm saying. Alphabet, I'm interested here. That could be a high close doji. It is a high close doji on the daily, sitting on the 200, which would be a natural place for it to reverse. Don't like the weekly bongos for so long, but I put it on a watch list so I can see what happens. Restoration Hardware pulled back to the 50, then broke up to the 200, had earnings, broke above the 50. Looks like it wants to go higher. Look at the earnings per share growth coming into this stock. Centene, this is a healthcare play. Nice uptrend. I think I got it last year in April when I was at the George Lee meeting. I bought it in the airport on my way home. It's had a nice move. So pull back and breaking out here potentially with a kahuna and a mobile breakout from a squeeze. Energen is a oil production company. It's been sort of chopping around in a Darvas box and broke out on Wednesday and Thursday. Great earnings per share growth. Viper is Venom we looked at a while ago. Wynn, Steve Wynn is out. He sold his shares. Maybe it's time for it to take off again, sitting on the 50. Watch list stock. I'm looking to see it break out, perhaps take out the high on Thursday, and I might be interested. Netflix, this was my call of the year. I told you all to buy it right before the earnings broke out, and it had such a great run. I'm out of it. It's now sitting on the 50. It looks like a reversal candle to me. I may want to go back in Netflix, but of course I'm going to have to look at where it is on its seasonality. So maybe we'll just take a look at that real quick. Its earnings are April 17th. And what do I see here? I see actually really negative seasonality, or not much seasonality at all. Up 5 or down 5 out, so it's 50-50, plus or minus 8%. Not a seasonality play. I do like where it's sitting here, and it might be worth nibbling. That's Netflix. Methanex is a chemical stock. Specialty chemicals looked interesting for whatever reason. Great earnings per share growth versus PE. Small dividend sitting on the 50. Kahuna, pocket pivot, mobile breakout, bongo turn green. HRG Group, this is one of the ones we just looked at. Consumer staples. Not my favorite. Site One Landscape Supply. Here's a stock that's been basing since December. Had a mobile breakout, a pocket pivot, and a kahuna on Friday. Don't love the earnings for this quarter. It looked interesting. Problem is it doesn't have much volume, so I'm probably going to pass on it. But I like the pattern. Here is Raytheon, uptrend, pull back to the 50 with a pocket pivot, kahuna, mobile breakout from a squeeze. Low risk buy, one of my favorite places to buy from. Parsley Energy, we looked at. Old Dominion, here's another uptrend, sideways, sitting on the 50, had a kahuna. I might put a buy stop above the PSAR. Jagged Peak Energy, plenty of shares traded, great earnings per share growth. In 1 year from 24 million quarterly to 100 million quarterly, gotta like that. Metals and mining, I don't know why they call it energy. I might have to do a little bit of oil and liquid-rich gas reserves, Permian Basin, okay. Big move up on Friday, lots of kahunas. That one looks interesting. XPO Logistics, this was my favorite of the truckers. Great uptrend, sideways, touched the 50 on Wednesday, moved up Thursday with a kahuna out of a squeeze. Beijing, this was sort of an expensive stock. Don't like the earnings per share growth, but I really love the pattern. Putting out a watch list, try to pick it up when the market has a sell-off day. MKSI, kind of loose, but pull back to the 50. Do you notice a pattern? Uptrend, sideways, breakout. So 5 below broke out early in the week, but had a kahuna again and mobile breakout, a squeeze on Thursday. Here's an IPO. I guess this is PAGS. Is this the one that is a eBay in another continent? I'm just watching this. Probably worth buying it. There's no, as it takes out its prior high on an IPO strategy. TD Ameritrade uptrend sitting on the 50 with a pocket pivot kahuna. CH Robinson, another trucking sideways on the 50, mobile breakup from a squeeze and a kahuna. Floor and Decor, another new stock, cup handle breakout. Ralph Lauren, uptrend sideways. Kohl's, here's my pattern. Uptrend, pull back to the 50, pocket pivots, kahunas, mobile breakouts from a squeeze, buy stop above the PSAR dot. These are some stocks that I found with some other scans. Southern Copper, copper is bouncing off the 200-day moving average, uptrend, pull back to the 50. Anything else in here that's worth me showing you? We're getting down to some of the lower quality stocks, or lower quality of the charts. They're all buys. NanoString, horrible earnings per share growth and all that stuff. Been going sideways for 4 months, and on Friday it broke above the 50, had a kahuna before that. I'm not saying I'm going into it. It doesn't have much volume, but it's an interesting pattern nonetheless. Here's a utility. If you're interested in utilities, breaking out above the 200-day moving average. And then Walmart, be interested to see what it does, but big pullback, like the market, it's been sort of glued to the 200-day moving average. 3 kahunas out of the last 4 days to the upside, 1 to the downside, mobile breakout from a squeeze. If it doesn't get punished for its interest in Humana, it might be an interesting time as well. So we've looked at the market. We've looked at seasonality and called out the fact that seasonality is strong this time of year. We looked at some of the groups that are moving. I showed you some of the stocks that I like. I hope you have a great Easter. Wherever you are, a safe and happy Easter. For those who are Jewish, like myself, enjoy the rest of Passover. Plenty more matzah to go. My wife made some killer matzah brie today for breakfast. What a treat that was. And we'll see you all probably not for a couple weeks, as I'm going to be traveling and I'm going to be doing a seminar next weekend. I've got a pretty busy April, so we'll see when I do this again. Goodbye, everybody.